Bitcoin and crypto markets are dumping again right now amid some mixed signals on the macro front. Let's jump straight into it because this is happening right now. So if we take a look here, you can see Bitcoin currently trading at a price of $99,582. We have broken 100K once again, and we are fast approaching these big wicks here at $99,887, the wicks we put in yesterday on yesterday's sell-off. I'm looking at the Coinbase spot chart here. I'm going to jump in and look at the liquidations. You can see once again over the last 24 hours we have liquidated about $500 million worth of long positions out of the market. That is versus about $200 million worth of shorts also liquidated. So it's an interesting picture to me because it proves that longs are still getting liquidated. Retail is still participating in this market on the long side and still getting wiped out. But once again, these numbers are getting smaller and smaller. If you take a look at the liquidation map now, you can see so much of that long liquidation risk has been wiped out. We can give this a refresh in just a second, but it's about $1.5 billion worth of long liquidation risk versus nearly $3 billion worth of short liquidation risk. And that is just cumulative over the 1 day period. If we zoom that out to the 30-day period, let me give this a refresh for you first. So there we go, 1.55 to the downside and 2.7 to the upside. And if we zoom that out to the 30-day period, we will see about $10 billion worth of cumulative short leverage liquidation risk in the market versus just $2.15 billion worth of long liquidation risk. And to put that into context, that massive sell-off that we saw towards the start of October was a $19 billion net long liquidation event. So hopefully that contextualizes this for you. The risk is much stacked to the upside. But nevertheless, prices are falling. There is clearly people still dumping out of this market, and we are getting more and more dismal, more and more fearful. The market is at a 21 on the Fear and Greed Index. Now there's some mixed signals happening on the macro front, okay? So we can see that the percent chance here tracks on FedWatch of another 25 basis point rate cut at the next meeting in December is elevated now to 70.6%, and that is up from, I believe, 67% yesterday. Now part of this is amid actually some pretty terrible unemployment news, or some layoff news specifically. So we've actually had the worst layoffs, and this is privately reported data because of course the US government is currently shut down, but we've had the worst layoffs or job cuts in 20 years. Look at this. US tech stocks led the decline, mixed US jobs data. There we go. So data from Challenger, that is a private reporting agency because the US government is still shut down, revealed 153,074 layoffs in October. That is the highest monthly total since 2003, signaling meaningful labor market deterioration. And this has probably increased the statistics of us getting that another extra 25 basis point rate cut at the next Fed meeting, which would generally be good for risk assets. Take a look here on Yahoo. You can see the Challenger report comes in amid a data drought from the Labor Department due to the government shutdown. I think that is really the crux of this, because basically we're making these reports, or these reports are happening with very limited data. So it's not the data that the Fed wants to use, it's the data that they are forced to use because of the current situation. I think that is in itself, partly because of what I just mentioned, but also for all sorts of other reasons, obviously leading to a lot of uncertainty in the market. And I think once we finally see an end to the government shutdown, that is probably when we're going to see a lot more clarity on this. And it could go one way or the other, but either way, clarity is certainty, and markets like certainty. Also, take a look at this. We can see Tether has bought the dip with a $97 million Bitcoin purchase. Not a massive buy, not a massive whale in the grand scheme of things, but clearly there are players buying the dip. And remember what I said yesterday after we saw the first company holding Bitcoin on their treasury selling. Now we've seen other players buying, right? Okay. Once again, my point there was, just because a company holding Bitcoin on their balance sheet is selling, and it's the first time that that's ever happened, it doesn't necessarily mean that that is incredibly negative news. It is consumed as negative news on the market because it makes a great headline. But the more companies choose to hold Bitcoin as part of their treasury, eventually some of them are going to have to sell. It can't happen until there's more people holding, right? So I just wanted to mention this because I think it contextualizes scary headlines that we see like that, which ultimately play into this negative rhetoric, right? This depressed market sentiment, 21 on the Fear and Greed Index. That is pretty much all I've got for you right now. Scary times, but I want to zoom out a little bit and just remember how scary this would have been back in April, okay? How scary this would have been back in August 2024. This point in the market is the point where big money is made, because it's the point where max pain is starting to be felt. I don't think we're quite there yet, to be honest, but I think we are approaching that zone. Could be totally wrong. Of course, just my opinion, and I'm only, as always, sharing it for entertainment purposes. Please don't consider anything I say financial advice. Thank you so much for watching. Plenty more to come. Catch you in the next one.